Blue chip dividend stocks can be some of the most appealing investment opportunities for income and capital appreciation. If you've ever wondered what blue chip dividend stocks are, why they're attractive, where you can find them, and find the best ones that are out there, hopefully this presentation will help to answer some of those questions. Hello, my name is Jim Penna. I'm the Manager of Retirement Services here at VectorVest, and I'm happy to be hosting this week's presentation called Blue Chip Dividend Payers. Our worry-free investing goal for retirees has always been to allow you to retire with the peace of mind knowing that you can grow your portfolio, generate income, and protect your capital. And the three key principles that make up worry-free investing are capital appreciation, dividends, and the ability to sell options to generate income, and also to understand how to buy options for protection and insurance on your portfolio. Now, we've done presentations talking about capital appreciation and high relative safety stocks, how to find those safe rising stocks in a rising market. We've also done presentations on how to sell covered calls and, most importantly, to buy insurance using put options for your portfolio. Tonight, however, I'm going to focus on dividends. Now, history tells us the term blue chip actually comes from the game of poker. The simplest set of or rack of poker chips come in three colors, basically red, white, and blue. And as you might have figured, the blue chips are the highest in value. So while not all blue chip stocks pay a dividend, most do because they are generally mature businesses and have significant retained earnings and cash flow to distribute to their shareholders. Some of the blue chip dividend payer characteristics are that they are large cap companies. These large cap companies have tremendous financial strength. They maintain important leadership in the economy, very well-known names we're all familiar with. They have a consistent and predictable financial performance when it comes to earnings and dividend growth. And to that point, these companies have paid and increased their dividends for many years. Let's go ahead and jump into the program and take a look at a new search we've added this week into our program called Blue Chip Dividend Payers. It's found in the retirement folder. If I go into our Unisearch tab from the main toolbar, we see our retirement folder. If I left click on that folder, I can open up and see our blue chip dividend payers. Let's take a look at the parameters involved here, and they are pretty basic in its current form, and yet we are able to accomplish several important goals for the concept of blue chip dividend paying stocks. Now, first of all, we start with our watch list, and on the US side, what we're using are the Dow Jones averages. The industrials, the transportation, and the utilities are the stocks that we're going to pull up, as well as S&P 500 stocks. Now, for those who may be using the VectorVest program outside of the US database, understand you can still do this. You won't have this search in your database, but you can look at your major indexes. You can add your dividend yield and growth rates here. And you can, we'll look at some graphs in a little bit, and we'll show you how to find those stocks that have the high dividend growth. In this case, in the US side, we're able to take the DRIP, or the Dividend Reinvestment Program watch list that we have built in from anywhere from 10 to 24 years, where these stocks have been not only paying dividends, but growing the dividends over that time. And then we have a watch list, the DRIP 25 plus years. So stocks that have been growing their dividend for 25 years or longer. And again, these parameters can be adjusted. You can change these watch lists, but the key here is going to be the sort. So if we look at the comments box down here, just to get a sense of what the search is designed to do, this search finds blue chip companies that pay a safe and growing dividend of at least 3%. In fact, the dividend payout on these stocks has grown year over year for at least 10 years, and in many cases much longer. Earnings growth rate and dividend growth rate are the key to this search. The VectorVest system makes it very easy to sort these companies by growth rate times dividend growth, bringing the best candidates to the top of the list. So I'm going to go ahead and hit run search, and we'll get a sense of the type of stocks that are coming up to the top of the list as of today's activity. And we can begin by looking at the sort here. Growth rate times dividend growth is what we're looking at here. When we multiply those two, we see Occidental Petroleum at the top as we speak. And so we've got the top stocks with that best combination, because at the end of the day, the earnings growth rate and the dividend growth rate is what we're looking for when we're talking about this portion of your retirement portfolio that is going to be allocated to dividend payouts. And so if I scroll over a little bit, we can also see Some of the important information here, the dividend yield on these companies, again, at the time of purchase, they have to have a yield of at least 3%. And their dividend growth rate for the top stocks are all double digits because we use that sort. Again, the earnings growth rate times the dividend growth rate coming to the top of the list. And so a pretty basic search that you can go ahead and adjust or tweak to your preferences. I'm going to walk through some of the results that we've been able to find using this over the past 5 years or so. So I'm going to start by going into the back tester. And what I've done is for the sake of time, I've run this back test already, and I've got a blue chip dividend portfolio set up here. Now I've gone back 5 years on this particular back test. This was a confirmed up call back in August of 2012, and I just ran it to the close of trading on the 7th. And we've got some pretty good numbers. We've got over 74% return. We've only got $477 in commissions. There was actually only 19 round-trip trades over that 5 years using the trading system that I'll walk through in a moment. We've got an annual rate of return of 14.62%, and that compounds to 11.5%. And the max drawdown over that time is only 9.45% for our portfolio. So we've got a nice move. In the portfolio, that's just the capital appreciation portion. The important note here is that this does not include the dividend payouts that we were able to receive. So if I click on reports, a couple of things we can take a look at is the trade history. And if I open up the trade history tab, again, there are 19 trades that are round trip that were open and closed. And we have some very good positive trades. Of course, there are some negative trades over those 5 years. There always will be. And we're able to overcome those with the positive trades and the dividend payouts. If I close trade history, I'm going to go back to reports and we'll take a look at the summary report here. And here we're able to see the history of that back test. We've got almost a 75% return. Once again, this does not include the dividend payouts. We've got our portfolio here, and here's a couple of important things to point out here. Is when we're creating our blue chip dividend portfolio, we've got to be careful to be sure that we are diversified. So the plan calls for having no more than 2 stocks per industry. So we want to be diversified. We don't want to have, especially on these longer term dividend paying stocks, too much invested in any one industry or sector. So if I continue to scroll down, we get the back test settings for this portfolio I've created. And just some important notes here again. We are going to open up all positions. We're going to use confirm calls to open our positions. We did use recommendation equals sell for those exit criteria. And again, we used max stocks per industry of 2 and held on to our positions during the confirmed down calls. I'll go ahead and close this summary report. I can come back, take a look at our graph here. We could look at the current holdings that are populating the portfolio right now, and we can get a pretty good sense that not only are these stocks paying a nice safe dividend, but they're also giving us the benefit of capital appreciation as well. Of the current 10 positions, we've got only one, Verizon Wireless, that's actually down. We've owned that stock since May of 2016, and just a couple of days ago, Verizon Wireless once again just raised their dividend another 2%, I believe, to again increase their dividend payout. And again, we see some very familiar names: Clorox, McDonald's, Johnson & Johnson, Lockheed Martin, Kimberly-Clark. These are all companies, again, that maintain that important leadership in the economy, and we're spread out pretty good over our sectors here as well. Next, I want to go back up to this local toolbar here, and what I've done is hit convert. When you hit convert along the back tester, you have a choice. I can start with an empty portfolio and begin a new trading system and go ahead and populate that portfolio with the stocks currently in the search as of today, or I can continue from the end of the back test to watch that portfolio moving forward from the beginning of the back test. I would suggest, if you're looking to start a paper traded account or an actual account using the blue chip dividend portfolio, you can come in, start it with an empty portfolio. It'll build it in the portfolio section, and I've done that. So if I go ahead and hit open portfolio now, we see the conversion here. I've already have one set up that used the back test, so we're good back all the way to August of 2016. Again, as we speak in the live stream here, we're up over 73.25%. Again, those same stocks are here in the portfolio and holding up quite well. when I start with the empty portfolio, I come to the blue chip conversion, and what we've done now is take those top 10 that are currently in the list, and we've just created a new blue chip dividend portfolio because we are in a confirmed call. And so the system knew to create that portfolio. These, of course, include commission, these prices that we paid. And so we are down fractionally here. That is commission as we speak. But we've got our orders placed. And the system also knows to put our stop criteria so that it can alert you for your real world portfolio to know that when the stock becomes a sell rating, we will go ahead and sell the stock and replace it as long as we're still in the confirmed up call. So again, here is the 5-year look. We're doing nicely. We've got a good idea of what these stocks look like. Now again, we haven't even touched on the dividend portion of this yet. So we're up a good 73% as it stands now. But what I'd like to do next is go ahead and graph these stocks and give you a sense of why they are so valuable when it comes to generating income in your retirement portfolio. So if I tag those stocks and right click, I can view a stock graph. So when I come to the graphs, what I want to do is go to set the parameters on the graph. I want to go to a weekly 10-year graph. And I want to take a look at and show the value of the dividend payout here and how we've got these nice lower left to upper right staircase on the dividend payouts for the stocks that come up in the search that we created. Now remember, from the search parameters, we wanted only stocks that were on those drip 10 to 24 years or 25 plus. So I've gone back 10 years and you can see that the dividend payout year over year has increased. Here for RSG, or Republic Services, is the first stock on the list from our current holdings. Clorox, another wonderful stock, that lower left to upper right move for both dividend payout and for capital appreciation. So we've got that nice pattern there. As I continue to scroll through, you'll see the same pattern. Right? And it's not by accident that these stocks that have strong, consistent earnings for these mature companies, these businesses that have been around and have this strong dividend history. Remember, once these stocks begin to pay these dividends, it's very difficult for the board or the chairman to not continue to grow their dividend. It's really a black eye for a company once they've continued to grow their dividend to either flatten it out or to not pay a dividend. And so these companies are aware of that. And a big key here is the dividend growth. It is a great insight to the board's confidence that the company itself can continue to grow their earnings. So we'll keep going through, of course, Johnson & Johnson, Eversource Energy. Again, these are all 10-year lookbacks at these stocks. Lockheed Martin, Kimberly-Clark. And so we know we've got these dividend blue chip stocks that just continue to pay, not only pay, but continue to raise their dividends as time goes on. Okay, from here, let's go take a look at the dividend income that was actually accrued here in this portfolio going back those 5 years. The dividend portfolio, at the time I've created this slide, had a return of 75.75% since, again, that August 6th, 2012 date, going back roughly 5 years. That 75% return does not include the $19,371 in dividend income that was generated. So I went back and I went to each holding, the time we held the stocks to the current holdings that we have in the portfolio now, and I calculated the dividend payouts that we would have been entitled to. So if we add that $19,371, that gives us a total return over the 5 years of just about 95%. And again, that's as of August 10th that I calculated those dividends to. Now, just another important point on the power of dividends. This does not include the power of compounding. This was the cash that was taken in. Now, over the 5 years, had you reinvested those dividends, of course, you would have been able to reinvest and buy more shares of the underlying stock and thereby had greater returns, both on capital appreciation and on the dividend payouts. Of course, you could still withdraw that money to pay bills, go on vacation, do whatever you wish to do with it. But just keep in mind, these numbers do not take into account the power of compounding. So that's an important point to make. And then finally, what I've done is I created a spreadsheet just once again to show the actual payouts that we would have enjoyed from these companies over the 5 years. So Abbott Labs, Century, Genuine Parts, all of these stocks had a part in this portfolio. And listen, not every trade works perfectly. Intel came in way back in August of 2012, and it didn't last long. And in fact, we were forced to sell it out as it became a sell rating and didn't collect any dividend at all. Of course, on the other side of that, we've got stocks like McDonald's that we still own. Since the inception of the portfolio, we've got well over $2,000 in dividend payouts. Johnson & Johnson, EverSource, another great source of dividend income. And so when you add all those dividends up, we have a total of $19,371. And again, these are as of August the 10th, updated the spreadsheet last. So I think some pretty powerful numbers for a easy to manage, safe blue chip dividend paying portfolio so that you can generate income as you enter retirement or during your retirement years. A very easy plan, easy to manage, made even simpler through the power of VectorVest. So again, our three core principles are capital appreciation, the ability to sell covered calls, which again was not even part of those returns. You could, through the life of the 5 years, even sold covered calls to generate even more income. And then finally, as we focused on tonight, the dividend portion. And just one more note, coming up in October, we will be conducting our live stream worry-free investing seminar in October. So if you're interested in learning more about the three core principles, please keep an eye out. Stay tuned to VectorVest to find out those exact dates and times, and we look forward to seeing you there. For now, our goal here, of course, is to take that stack of blue chips that are on your poker table and to turn them into a stack that looks more like that. Thanks everyone for taking the time to join me for this presentation. Please stay safe and happy trading to all.